Welcome back. You're still tuned in to Good Morning Namibia on NBC. Now, today we continue our discussion on the Financial Institutions and Markets Act, commonly known as FIMA, a key law that regulates Namibia's non-banking financial sector under the oversight of NAMFISA. Now, our focus is on chapters 3 and 4, which deal with financial markets and collective investment schemes, introducing stronger regulation and measures to address market abuse and insider trading. To help us unpack what these changes mean for consumers and investors, we're joined on the line by NAMFISA's consumer education specialist, Mr. Junius Erasmus. Mr. Erasmus, always a pleasure to be speaking to you. Good morning.
A very good morning, sir. Thank you very much for having me.
Very well. Mr. Erasmus, first things first, what do chapters 3 and 4 of FIMA actually focus on? If you could just give us an explanation of that.
Well, thank you. Chapter 3 and Chapter 4 of the Financial Institutions and Markets Act, the Act number 2 of 2021, that is commonly known as FIMA, so regulates Namibia's financial markets and collective investment schemes. So those chapters provide a modern legal framework that governs how investment products are created, marketed, and managed, and how financial markets operate. So their primary objective is to promote transparency, market integrity, and investor protection.
Very well.
So by introducing clear rules for market conduct and investment activities, so FIMA strengthens confidence in the non-banking financial sector and ensures that investors are treated fairly and consistently.
FIMA renames unit trust schemes as collective investment schemes. What is the significance of this change for consumers?
Well, the renaming of unit trust scheme to collective investment trust reflect a broader and more inclusive approach to regulating pooled investment products. So this change aligns Namibia investment framework with international standards and best practices. So for consumers, it means improved clarity and understanding of how those investment products work, as they involve pooling funds from multiple investors to be professionally managed. So the new terminology also allows the law to cover a wider range of investment structures, ensures that all such schemes are properly regulated and subject to consumer protection requirements. Thank you.
Yeah. Now, how do these chapters 3 and 4 actually expand the scope of collective investment schemes under the Financial Institutions and Markets Act? Yeah?
Well, Chapter 3 and Chapter 4 expands the scope of collective investment by allowing for the introduction of different types of investment schemes beyond traditional unit trust. This enables innovation and diversification within the investment market while maintaining strong regulatory oversight. Importantly, all collective investment schemes must comply with governance, disclosure, and operational requirements set by FIMA. For consumers, this means greater access to regulated investment opportunities, improved transparency about risks and returns, and stronger safeguards against unregulated or misleading investment products.
Yeah.
Thank you.
Talk to us then about what new measures FIMA actually introduces to prevent market abuse and also, quite critically, insider trading.
Well, FIMA introduces clear and enforceable provisions that define and prohibit market abuse and insider trading. So those include practices such as trading based on non-public price-sensitive information, manipulating market prices, or engaging in deceptive trading behavior. So by explicitly criminalizing such conduct, so FIMA enhances market integrity and ensures fairness in financial markets. So those measures protect consumers and investors from unfair advantage enjoyed by insiders and promote confidence, and investment decisions are based on accurate and publicly available information.
Just expand a bit on that, Mr. Erasmus. How do chapters 3 and 4 of FIMA benefit consumers and investors in actual practical terms?
Well, in practicality, chapter 3 and 4 of FIMA create a safer and more reliable investment environment for consumers and investors. So investors benefit from stronger regulation and financial markets, clear rules governing investment schemes, and enhanced protection against fraud and unethical conduct. So the law ensures that investment products are properly licensed, supervised, and transparent. So ultimately, those chapters encourage information or informed investment decision, promote long-term savings, and contribute to financial stability and economic growth of this very wonderful country of ours.
Always a pleasure to be talking to you, Mr. Erasmus. Thank you so much for bringing us this topic and, of course, explaining it to us. We hope to speak to you, of course, next week. Yeah.
I thank you. Thank you very much. Perhaps let me just say my very last message to all the consumers out there to please always invest through regulated institutions. So ask questions and understand the risks involved, and know that NAMFISA is here to protect your interest and promote a fair, transparent, and inclusive financial system. I thank you very much.